In our presentation, sponsored tonight by Alvexo, one of the world's leading providers of Forex and CFD trading. Alvexo is a real broker for real traders. Alvexo offers stock trading, indices, Forex, commodities, and cryptocurrencies. If you want, during class, you can go to www.alvexo.com and open a demo account. And there's no deposit required, no credit card deposit required, and you can follow along and use their education and their charts on their platform, and you can make all the demo trades you'd like. Now, Avexo is a regulated provider. Now, if you can't access the Alvexo site from your home, means that Alvexo is not regulated in your country and therefore doesn't offer trading. But Alvexo is regulated in most of the major countries around the globe. Now, Alvexo offers a dynamic and easy to see trader friendly platform. And you can trade around the world seamlessly, jumping from mobile to your desktop, to your laptop, to your tablet. They provide trading in any format you wish. You can trade over 450 real-time assets in a user-friendly, easy to see, clean platform. They offer cutting-edge technology, outstanding customer support, and they are a regulated provider. You can also join the Alvexo Trading Academy, and they offer information and education for beginners, for experts, for professionals, for newbies. Whatever level you're in, you're going to find information, research, plans, and education materials for you. Now, tonight's class is being recorded. And if you wish to see a recorded version of tonight's class, in about 24 hours from now, you can use the same link used to attend this class, and it'll take you to the recorded version. Or when investing.com has had time to edit it and clean it up, you'll be able to find it on the investing.com website under the education tab and then under webinars on demand. In fact, there you can go and see every webinar we've ever presented in all the years we've been doing education. Now, since Alvexo is a regulated provider, I have to give you a risk warning. Trading Forex, CFDs, and spread bets on margin carries a high level of risk and may not be suitable for all investors. You may lose more than your initial deposit and could be required to deposit additional funds. Please ensure you fully understand the risks and take care to manage your exposure. This webinar is considered a marketing communication and does not contain and should not be construed as containing investment advice or investment recommendations. In this webinar, I'm going to give you lots of my personal opinions and experiences. Now, I've been trading for close to 45 years now, so that's a lot of opinions, a little bit of experience. And I'm not going to provide you any information that's generally not available to the public. Basically, anybody who's going to provide you secret black box trading or secret robots or secret AIs, they're full of it. The market's not made up of secrets. It's made up of lots of education, lots of research, and lots of abilities. So tonight we're going to be discussing market analysis and the geopolitical events going on around the globe. Now, to analyze markets, whether you're trading stocks, commodities, currencies, there are two main types of analysis. They fall into fundamental and technical. Now, fundamental analysts study everything from the overall economy and industry conditions to the financial conditions and management of a company. Technical analyst, or technical analysis, is the evaluation of security by means of studying statistics generated by marketing activities such as past, price, and volume. So I explain technical analysis as basically anything you do and put on a chart, whether it's long, complex mathematical calculations that give you an indicator, or it's a simple looking at a chart. Fundamental analysis is basically anything you read. Now, I know all of you are sitting back waiting, and you all want to talk about what? Well, we either want to talk about the East, we want to talk about this virus spreading around the globe, we want to talk about safe havens, but we have to get there before we have to get up to there. Now, geopolitical risk is an ever present theme in the global financial markets and requires traders to be up to speed on global current affairs, particularly in geographies that can cause widespread economic disruption, either through supply or from a demand perspective. What are the types of risks that fall in this category, and can they be avoided? These are two typical questions traders ask when it comes to knowing geopolitical risks that may arise and how to position for them. Most geopolitical risks we can't prepare for. We know when there's a big election coming up. We know that we have the US presidential election coming up. Okay. We know the day we have the results. We knew we had the Brexit vote a couple years ago. We knew we had the Brexit thing when, actually just recently when the UK left the EU, but that kind of just fizzled out. Okay. But most geopolitical risk we can't really prepare for because it runs from natural disasters to wars to civil disturbance. We couldn't predict the demonstrations in Hong Kong. We sure had no idea there's viruses coming at us. And we sure had no idea about all these Australian fires. So the main categories that we can prepare for are general elections. And they're a good example of geopolitical risk. When elections are due every 4 or 5 years in the US, in the UK, when they call an election, when we saw Greece go into so many elections, couldn't form a government. Spain couldn't form a government. I think Italy also had a problem forming a government. These do cause major geopolitical risk. The more important the country the election is in, the more important the effect of the current market will be. The US presidential election, which actually kicked off yesterday with the Iowa caucuses, well, look at that mess. Could we predict that Mayor Pete was going to come out on top? Nope. But we couldn't predict, number one, the major survey due out on Sunday wasn't released because there were some errors in the questions. And then on Monday, we had the vote, and they had this whole new app for reporting and it all fell apart, and we still don't have the actual results yet. Now, this is geopolitical risk. It's not going to affect any major asset. But if it was a very slow news day and it was the headlines of the papers, it might, because these events also all depend on the day that we can't predict. Sometimes little unimportant globally political events or geopolitical events happen that normally wouldn't upset the market. But because it's the middle of the month with little bits of economic data doing out and there's no major news happening anywhere, this little stupid thing can spark craziness in the markets. Now, some geopolitical events and especially elections are perceived as being riskier than others. The market participants adjust portfolios and exposures, considering the economic policies of those respective candidates. So, for instance, we have referendums. What was the last big referendum? Brexit. We're also probably going to have some type of mess out of Scotland coming up. But we also had referendums in the Greeks during the financial crisis were a mess. And then with their loans and all the other stuff, we had the Brexit vote. The big problem with elections and referendums is the fact that the results are announced over the weekend in most cases or late at night. So when there are crazy things like the Brexit vote, the markets have had time to prepare overnight. And you see this huge gap up in the morning. It's like the pound tumbled and the footsie tumbled, after the Brexit vote. But it all came overnight, and the markets were actually prepared. And the fact is, they moved so fast that most people couldn't get positions in. We had a couple years ago when the Swiss bank pulled the peg out of the euro. Okay, and the markets were moving so fast the liquidity was dried up. Now, war and tension and terror are also completely unforeseen events. You know, the Israeli and the Palestinians shooting rockets across the border. Well, no biggie. But when Iraq or Iran do something unexpected, or we get, the explosion in Saudi Arabia, or Iran tries to stop a U.S. ship in the Gulf, it causes market instability. And if things get heated up, there could be two ships out there in the oil land, but the headlines of the paper can drive everybody crazy. But they do offer results. To give you a great example, when Russia invaded the Ukraine, completely unexpected, happened on a weekend. Anybody with any brains would have been ready to buy and have buy orders sitting on crude oil the minute the markets opened anywhere, because you knew crude oil was going to go through the ceiling. Okay. Didn't make a difference if we weren't sure the dollar was going to go up as a safe haven. We weren't sure the people were going to run to the Japanese yen, because we weren't, to be honest with you, by Monday it all was all over with. But the markets opened and crude oil went through the ceiling, went from the 70s to almost, I think it went to 106. Okay. Everybody could have made a ton of money. So being prepared and understanding what assets could be affected with terror and war and major geopolitical stress can give you potential opportunities. So again, it was when Russia invaded the Crimea and took the region from the Ukraine. Markets were taken completely by surprise. The world was taken by surprise. So geopolitical risks are everywhere, and one can only adapt to the ongoing situation. By the time a conflict or situation is ending, another part of the world is starting. Like I said, whoever could have predicted this virus out of China? Who could have predicted outpacing SARS? Who could have predicted the quarantines? They closed the casinos in Macau today. Never happens. Most of Hong Kong's quarantine. They just quarantined a Japanese cruise ship with 3,100 people on it. A cruise ship going to Japan with 3,100 people in. I mean, we don't even understand what the geopolitical risk is going to be from this, because it's affecting growth. And you say, why? Okay. Well, if you took all of China and got it closed down and lots of people out of work. Well, they're not importing, they're not spending because they don't have, they're not, they're being quarantined. The exports aren't going out, the imports aren't coming in. Airlines are losing money because they're canceling all their flights. Okay. All this has geopolitical risk, and we don't know where it's going to stop. Now, economic conditions in recent quarters have been a positive for the financial markets, with growth across key economies have been in sync for some time. The global economy has been all right. We've all come out of the crisis. Stock markets, especially in the US, have been trading very, very, very high. This little set of circumstances, because we have several different things going on. We have Donald Trump's peace plan. We don't want to discuss the validity of it, but it's increased some tensions in the Middle East. We have Iran, Iraq, Israel, and the rest of the terrorists. We have Iran calling for jihads. We have all of this stuff going on that is going to have a global effect on the markets. What is going to be? It's hard to predict, but it's going to have an effect on growth. So, despite the broader economic outlook being on the positive side, geopolitical risks have continued to create volatility in the global markets. At this writing, geopolitical risk being a possible North Korean crisis, an anti-EU coalition government in Italy, the threat of a trade war, I didn't even mention trade wars yet, between the US and China, prolonged NAFTA negotiations between Donald Trump saying, oh yeah, we're going to sign the Chinese trade deal 3 Mondays ago, never happened. We have now the new deal that's supposed to go between China, the US, not China, Canada, the US, and Mexico. It's supposed to be signed, not done. The U.S. withdrawal from the the Iran nuclear agreement, which is escalating with sanctions and violations. And now, Iran's threatening, or they're not threatening, they're saying they're going to launch a satellite. Okay, all of these things are happening at one time. Now, here on this table, you can see what the effect was to the markets, and not just to the stock markets, but gold. Gold soars up, stock market comes down. The 10-year bonds in the country. So we had the Gulf War, unexpected. We had 9/11 in the States, totally unexpected. We had the Iraqi War. So we can see when we have these major political wars, terrorist accounts, whatever we're going to call these, stock markets tumble, gold climbs, bonds climb. Now, on your screen, you can see from BlackRock, the major cybersecurity company, their global risk index. And you can see how the risk on the markets went along over many, many years here. We go back to the Arab Spring. We go up to the Eurozone crisis. We come down to Russia invades Crimea, the U.S. election, the last one when Trump won. Then we have the North Korean tensions. Then we have the global risk with the U.S.-China trade tensions. Because even though this is not a physical war, it is a trade war that can really, unfortunately, escalate and have major ramifications. So what are the 10 risks that we're looking at? We have Gulf tensions, European fragmentation, global trade tensions. We have South Asia tensions. We have Russia, NATO conflict. We have the U.S.-China competition. We have that's one of the things we haven't talked about, major cyber attacks. We have North Korea conflict, major terror attacks, and then we still haven't even looked at Latin America yet. So everybody wants to talk about, I don't even know how to say this right, coronavirus. Okay. Corona, from the Corona beer, I guess. No, I don't know where it came from. But it's outpacing the SARS virus from years ago, and we don't know where it's going to stop. It is growing so fast, and the death toll is getting higher and higher. And you say, there's only 350 people that have died. Well, that's out of several thousand cases. So say we have 350,000, which we don't. So say we have 35,000 cases with 350 deaths. That's a big percentage number when it spreads around the world and you got a billion people involved. Add a couple digits to the end of that. But it's also as how is the world going to stop the spread? Now the markets are overstated anyway. They were ripe for a 10% correction. They've been too high overall. Now the last two major pan epidemics that we had were also created when the markets were at low points. When a market is a very high point, they can tumble very, very easily. Okay. Now, from there, let's move on. So this is current. We have the coronavirus, and all I know is all right now, all the safe haven assets, even Bitcoin and the major cryptocurrencies, people are running because they're running out of the stock market. They're running to safety. Gold is back over 1560. I think I have a chart of gold up here for a minute. Let's take it. See where gold is at the moment. I think I have a chart posted here. Yeah. So we can see gold ease back down, but it's at 1570 after hitting 1600. I mean, it broke 16 here at 1611, which hasn't done in a very long time. Gold is one of the major safe havens. You have the gold, the yen, the U.S. dollar are safe havens. When people want to, they're not looking to make money. When people want to park money to be safe, when they're unsure, and we're not talking about traders and investors. We're talking about people who have huge wealth, and they just say, "Okay, we don't know what's happening. We're not concerned with making money. We don't want to lose money. We want safety." They also, in countries that have big economics, they want to park their money somewhere that if they have to leave their country for some reason, that they have access to it. Used to be, people would buy gems and hide them in the dresses and the lining and everything so that they could be kind of mobile. But today we have new safe haven assets. Mhm. So after we have the virus, we have the U.S. China trade frictions, and they appear to be moving sideways. This limited phase one trade deal, I don't think has ever been signed. I don't think it's ever been accepted and implemented. So nonetheless, we expect strategic competition to continue across a range of dimensions, including technology. You know, with Trump, unfortunately, we never know what's going to come next because he's always looking for some type of headline. He's looking for political clout. Why did he release this Mideast peace deal? He's been talking about it for years, 2 years now. Why did he pick this week last week to release it? Really didn't help Netanyahu in his political mess because they've had 3 elections and they can't get a government. But the Trump's trial in the Senate was the headlines of the papers. He wanted to get that off the headlines. He wanted to overshadow it, number one. So he overshadowed it with other news. And number two, he's hoping, he'd get a Nobel Peace Prize. I think he's got shocked. The rest of the world doesn't want anything to do with this peace deal. But that's not my personal opinion. It's just where things are. Okay. So we never know what Trump is going to say or do or sign next. Now, unfortunately, we can never time anything because he was doing all of these things to cover his news. Who could plan that? Unfortunately, Kobe Bryant was killed in the helicopter crash. Being an international sports figure, took over all the papers, especially in the US, and it became the headlines. And Trump was pushed completely off the headline. I mean, nobody remembers what happened last week with his impeachment. And this is what happened. Now, even though Kobe Bryant had no effect on the overall markets, he did have an effect on the press. Okay, now we also have a lot of stuff going on between the US, Mexico, and Canada. You remember, Trump pulled out of the old NAFTA, which was the trade agreement that's been in place between the three countries for a very, very long time, with no commitment, not a renegotiated new deal. He just pulls us out of the deal. Well, then he insults Mexico, he insults Canada, and then he expects his trade deal, his new trade deal, to slide through. Now, it's not happening either. Then we have the mess in Argentina, we have Brazil, have all of this stuff going on. Then we also have tension between the US and Europe. He's insulted everybody. And who knows what's going to happen next? His NATO mess, demanding his nobody can make any rhyme or reason, but I don't want to stay on Trump. But unfortunately, the US is one of the biggest geopolitical risk determinations in the market because they make the most headlines. Now, the other thing that we don't really hear about minor cyber attacks. Lately, we've heard that there's an attack, a cyber attack on North Korea is doing everything they can, but there was a big cyber attack on a gas and energy company. But we still haven't seen a major cyber attack anywhere. And every day it gets closer and closer. So this year could see heightened risk of nation state attacks on the US in the wake of increased tensions with Iran, Iraq, China, North Korea, and Russia. Now, what's happening is we're moving from terrorism and street violence to computer violence, computer war. So cyber risks are also likely to increase in the lead up of the 2020 US elections. An uptick of ransomware attacks against cities and states with relatively poor defenses may be a sign of things to come. So we raised the likelihood of a major terror attack in the wake of Turkey's incursion into Syria and tensions in Iraq. We worry about the resurgence of ISIS in northeast Syria following the eviction of US allied Kurdish forces. This has led to reports of jailbreaks of ISIS fighters and families and the reconstitution by ISIS of key capabilities. So pulling back of Western allied forces in Iraq reduced the pressure on ISIS and could allow it to regain strength. Okay. Now, these are just some of these events. Now, as a financial educator, I belong to a lot of organizations, groups, associations. And I recently got an extremely good video from Eurasia, which is one of the member groups I belong to. And I'm not sure how it's all distributed, but I copied it for you and I'm going to share it with you because it really goes over the 10 major risks that we're looking at right now. So let me share that with you. And then we're going to take a look at the assets that can be attacked, that can be affected.
Generations. Turkey's President Erdogan is no stranger to controversy and confrontation. In 2020, he faces unprecedented problems, especially deteriorating relations with the US, that will lead his nation to new lows. His popularity is declining, and his weakness will cause him to lash out. All this comes as Turkey faces financial strain caused by sanctions, leading to more political and economic instability.
There's a lot of anger in Latin America these days. Slow growth, corruption, and low-quality public services have raised social tensions in a region where a new and vulnerable middle class has high expectations. Countries as different as Mexico, Argentina, Colombia, and Ecuador all face tough decisions, as budget cuts and austerity measures could mean more protests and volatility in 2020.
U.S. policy toward the major Shia-led nations in the Middle East is imploding. That creates significant risks for regional stability, including a lethal conflict with Iran, upward pressure on oil prices, an Iraqi state that is either in Iran's orbit or failing, and a Syria fused to Moscow and Tehran.
Efforts to reverse climate change are not working. Today, we are on pace for a 3.5 degrees Celsius warming. That's a looming disaster for the planet and for millions of people, but governments can't agree on how to share the burden of fixing the problem. In 2020, it will become harder for companies to meet public expectations that they get greener. Investors and NGOs will pile on the pressure for action. There's also a risk of good old-fashioned public unrest. And if a warming planet triggers a natural disaster that disrupts national politics and economies, things will only get hotter.
Washington and Beijing won't like it, but Europe will become more assertive in 2020. On regulation, the EU's top antitrust official is battling North American tech giants. When it comes to trade, look for the EU to get tougher on China and to advance its climate goals by setting new rules with the threat of tariffs to enforce them. We won't see a European army, but EU leaders will use the world's largest internal market to break down cross-border barriers to military trade.
India's Prime Minister Narendra Modi has already spent much of his second term promoting controversial social policies. His government has revoked special status for Jammu and Kashmir, stripped nearly 2 million people of their citizenship, and advanced a plan to make religion a factor in whether migrants can live and work in India. In 2020, he'll up the ante further, even as protests and unrest grow. This agenda will harm India's foreign relations and further hurt an already weakened economy.
Many believe multinational corporations can fill the gaps of global governance in a G0 world by stepping up to lead on climate change, poverty relief, and even trade. In fact, MNCs account for a quarter of worldwide employment, a third of global output, and more than half of global trade. But in 2020, governments will work to put a leash on many of these companies. Expect new data policies, higher taxes, new cyber standards, and more, creating a more challenging environment in the year ahead.
As the US and China go their separate ways in technology, we'll see a more explicit clash over national security, global influence, and values. The two sides will continue to use economic tools as their main weapons, things like sanctions, export controls, and boycotts, but they'll have shorter fuses and increasingly overt political goals. As tensions play out over trade policy, Taiwan, Hong Kong, human rights, and a host of other issues, other countries as well as multinational businesses, will get caught in the crossfire.
The decision of the US and China to decouple in the technology sphere is the single most impactful trend for globalization since the collapse of the Soviet Union. The fissure is disrupting the flow of technology, talent, and investment between the two nations, and will expand beyond semiconductors, cloud computing, and 5G networks to impact media, entertainment, and academic research. As a virtual Berlin Wall goes up, which side will other countries choose?
In 2020, US political institutions will be tested in unprecedented ways. The nation faces the risk that the presidential election will be viewed as illegitimate no matter who wins. Democrats will accuse Republicans of placing President Trump above the law and of using his presidential power to investigate his rivals. What's more, Washington will do little to stop outside election interference, especially from Russia. The uncertainty surrounding the election.
So that's enough to give all of us nightmares. We have to worry about elections, natural disaster, wars, and civil disturbance, plus all of these other crazy situations going on around the world. Now, I'm going to share you one more little presentation from a private group called Controlled Risk, because I'm giving this webinar just one time, and to do the research. I mean, I deal in this stuff every day, but to put it all together, you know, is a lot of time and effort, stuff that I'm not even know of. I mean, the stuff going on in India, I wasn't even really aware of. So it's better to get it from the experts, but you have to be prepared for it, because it can shift the markets at any moment and upset every bit of trading you have. You need to be always prepared. It's one of the reasons, if you're trading CFDs or Forex or cryptocurrencies, you need to always have your risk assessed. You need to have stop losses and exit plans always, so that you don't get messed up by one of these unprepared events. Because you never know what's going to turn the markets upside.
In a world of disruption and discontinuity, at least there's something you can count on. Control Risk's top 5 risks for businesses around the world. Here we go for 2020. At number 5, we look at leaders without strategies. At the helm of some of the world's most important countries is a crop of leaders who can't see further than the next crisis. For them, tactics trump strategy. 2020 is shaping up to be a year when the brakes on incident escalation are absent. We now live in a world where resilience at the state level is weak and long-term solutions take too much time to find. Whether it's a global trade war, a cyber attack, or a regional border battle, the pace of events is in the hands of twitchy, anxious economists. Business will need a strategy for an intensely tactical world. At number 4, economic anxiety meets political fragility. Even the most optimistic forecasts say that global economic growth in 2020 will be dismally slow, or, as our partners at Oxford Economics put it, a grinding recovery and growth. This before any account of an economic shock that could shake an uneasy global economy. If global GDP takes a turn for the worse, do not expect a fragmented world to craft a coordinated policy response. Will countries riven by polarization rally in the face of economic hardship? And what about the economies dependent on resource riches, or those which still haven't fully recovered from 2008? In the event of a downturn, or even in the best of cases, which countries will survive and which will go to the wall? At number 3, cyber warfare hits a new level. Cyber threats in 2020 will line up like never before. To provoke a high-impact, cyber-enabled assault on critical infrastructure. Western deterrence has failed to stem the tide. Hostile actors are using ever harder methods. In theaters of strategic conflict, unpalatable military measures will give way to cyber attacks. And if provoked, the US will retaliate in ways that show the world how much it cares. And so will begin a new cycle of escalation. The West's cyber-capable rivals and their proxies will raise their game with unpredictable consequences. If leading companies are finally attaining credible cyber resilience, national infrastructures across the globe are not. They present the main vulnerability in the international cyber conflict. At number 2, the activist society passes judgment. Around the world, social pressures and synchronized activism on issues including environmental protection, political and human rights, inequality, and privacy are demanding more and more from business. In the street, in shareholder meetings, and inside your company, the activist society will bang ever harder on the boardroom table in 2020. For companies, paralysis looms as myriad movements make demands that are increasingly loud and challenging. This uncodified morass of social, moral, and political accountability will consume any company caught unawares. Conversely, companies that get this right will be embraced. Being ethical is not enough. Being compliant is not enough. Know what to stay ahead of in 2020. And
the number one risk is the U.S. political and election that kicked off today. So that little presentation, it was more like a science fiction doomsday horror film. You know, you listen to all of these possible things that can come to, and what's happening is they're coming in a very short time window here. They're actually happening today. And it's very, very scary. So you have to sit back and decide what will affect what assets, and be prepared. You can make money and profit by being on the right side of an asset that's tumbling, by selling short, or on the other side, being right on an asset that could soar. You know, you need to understand how each of these events can happen, but you never know what headlines are going to hit. We didn't have any idea about the arrest of the daughter of the CEO of Hanwei in Canada and the denial of them getting into the US with 5G. But that had an effect on the stock market. It had an effect on telecommunications. It's got a, it was the kickoff of this major political mess, or this trade war we're in. And what the next ramifications will be, who knows? So be prepared. But it's very, very hard to trade these events if you want to just be in front of the market. You can't pick an asset today that might respond to these events, because you can't afford the volatility that might come in between. So, like I said, I don't know if you can sleep after all of these possible horrible things that are coming to the markets, because there wasn't anything positive in any of that. But geopolitical risk is never positive, but we get through it. And that's our conclusion for tonight. Thank you very much for joining us. If you want to know more about how to trade the news and trade the headlines, go to www.alvexo.com, and they have several videos on trading strategies that you can employ based on news and headlines. Have a great night now, and thank you for watching and joining us.